Insurance, you hope you never have to touch insurance, right? Ever.
Right.
But if you do, you don't want to get blindsided later. 99% of people who don't know insurance are going to look at two things.
How many people sit on the fence during an election year? And then couple that with the interest rates, which should have gone down.
The Fed is supposed to meet again next month. They're anticipating Thank you, everyone. Thank you for joining the SurePath Lending podcast. So today I've got with us Michelle Spooner. She's a real estate agent with Weichert Realty. And I've got Tommy Evans over here with Goosehead Insurance. So appreciate you guys coming in. And
You're welcome.
Thanks for having me.
Take a second and tell us a little bit about yourself.
Well, why don't you start, Tommy?
Okay.
You decide.
Yeah, my name's Tommy Evans. I have been working with Goosehead Insurance for the last 5 years now. So Goosehead Insurance, we're the largest independent brokerage here in Texas. Fancy way of just saying we work with a ton of good carriers out there in the insurance market. But yeah, I think the insurance world has shifted entirely since 2020 for even the short years I've been working there. But I think I want to come in today with a lot of optimism that the market is looking better. I think when you hear insurance, your bones kind of chill. But we're looking good. I think we're in a stabilization year. Things are starting to calm down. So 2025 is looking really good for insurance. So I'm excited to be here and talk about it.
Excellent.
I think it's looking a little bit better for us too in the real estate industry, 2025. I've been an agent at Weichert. I just recently switched over. I was with Keller Williams for quite a long time and recently moved over to Weichert. They have a fantastic relocation department there, something that I'm very interested in. I've moved around probably 10 years. I had 7 different houses. We moved from state to state to state. So I'm very familiar with the insurance industry as well and how that affects affects real estate.
Yeah, one house to the other. It's they could be next door neighbors, and the house can be completely different.
It's amazing to me. And state to state, you know, I mean,
oh my gosh,
from Texas, I think our premium just jumped, 10% when we moved here from Virginia. Virginia was a lot cheaper than Texas, but then North Carolina was ridiculously cheap. So
I was South Florida, so it was pretty expensive down there.
Oh my God, forget that.
Pretty bad. Yeah. But I always warn people from out of state when they're moving to Texas that you're going to love it. It's the best. But fair warning, it's the insurance is going to be a little bit different. But it works out. They have no choice. They got to get insured.
Yeah. All right. Well, good deal. Well, let's jump into this thing. What do you say? All right. So I wanted to talk a little bit about some market trends that are kind of going on within the industry on both the insurance side, the mortgage side, and the real estate side. So let's start with you, Michelle. So tell me a little bit about kind of what you're seeing as far as market trends and kind of where you think things are going and kind of how 2025 is shaping up.
Well, as trends-wise goes, it depends on where you focus your attention, right? So I tend to be a luxury agent. I focus a lot of my attention on the luxury market as well as empty nesters. Do a lot of business with empty nesters. We see a huge trend with that group moving into smaller homes on less acreage. Right now I'm in Fairview, Lucas area. Most of those homes over there are on 2 acres of land, an acre and a half or more. Most of the individuals are looking to have smaller homes, 1 story. They don't want the upkeep, so they're looking at the newer construction homes. And in that way, it is shifting. We do not have a lot of inventory. As you both know, that it has changed considerably. And with the interest rates that are a little bit higher than what we're used to, and people are staying put. So we don't have those homes for these individuals to move into. They don't want to give up their 2.9% rate.
Yeah, that's
guilty.
Yeah. But as we know, appreciation happens anyway. You can sit on that house at 2.9% all day, but that house over there that you want because you want to downsize maybe, and your house is too big and your cost of your utility costs are too high and maintaining the yard and the pool, and you just know that you want out. Well, today it's 500,000 and maybe tomorrow it's 525,000 and you wait again and it's 550,000. So there is no better time than the present than to make those moves.
Yeah.
So you're going the other way.
I got my wife and 2 kids. I feel we live with 15 people in a shoebox, so we definitely need a bigger house. And we're there. It's just a matter of, can I get over the fact that my interest rate's going to quadruple?
Well, I can certainly help you with that. Don't worry about it. I'll find you that house.
That's kind of what we're seeing on our side is that, when we have borrowers call in that want to get pre-qualified, they're having that mental block of walking away from such a cheap interest rate and such cheap money that they're wanting to, instead of sell that house and take that money and put it into a new home, they're looking to, all right, well, can I rent it? I mean, it's going to cash flow now. You've got a ton of equity in it. Your payments are pretty low with respects to rents. So you have a lot of clients, and that's, it's great for some. I would say it's not a fix for everyone. Especially those who have never managed property, or that can be a whole, trouble.
Well, I'll talk on that. I don't know the first thing. In theory, it sounds fantastic to rent out this house and take in income. Absolutely. But I'm like, I don't know the first thing about it. Like, where do I start? I got to hire a property manager. Like, there's so many questions that I have. But in theory, I'd love to do it. Absolutely.
One thing about when you talk about property management, I do work with a lot of investors and who are looking for those type of properties. And they, with their insurance, it's really, really important that they have a specific insurance policy in place when they have tenants involved, correct?
Yeah.
Can you talk a little bit about that?
So the dwelling, so the rental market is strict. I mean, like I said, I work with 50 different companies, and like 5 are willing to insure because they're tenants. So if something were to happen in your home or the home that they're living in, like, they're less likely to jump on it right away because it's not their home, right?
Right.
So it's a risk for these insurance companies that's all this market is risk. Are they willing to take it on? And in this new market, it's low. So that's the issue. But being a broker, like I said, where most companies don't have any options, I at least got 5, and I consider that a lot in this new market. So there's always good, really, great companies out there. Who's willing to take it is the option. So I just got to shop around, but it's expensive
So
to make it worthwhile.
Yeah, nice. So when you're talking about like coverages and things like that, I mean, so we all know, I mean, with the amount of storms and all the insurance premiums are just skyrocketing, just like everything else. Do you guys feel like, or do you feel like you are having clients that are opting for like dirt cheap insurance?
Well,
how do you mitigate that and kind of educate them on, look, insurance is insurance until you need it.
Yeah, and I think that's like why when I first started, all insurance was the same cost. In 2019, 2020, it was just a matter who you want to go with, like reputation basically at that point. Now it varies so much, and so to that point, absolutely, my job as a broker is to do the handheld approach and tell you what you need and what you don't. Now, it comes with that high premium, of course, to get top-notch coverage, low deductibles, all the water coverage, full replacement on everything, absolutely. So it's kind of my job to be like, look, this is your asset, this is your home, in most cases your biggest asset. How do you want to properly cover it? So that's the issue I'm running into, where I'm really big on coverage first, price second. That's just been who I am since day one. I'm gonna get you a great price, I definitely am. But let's cover your house, because why pay for insurance at all if you're not gonna cover it properly, right? So it's a matter of whenever I get another, I'm shopping around and someone goes, hey, well, I found an option for $300 less. I go, hey, if you don't mind, send me that quote. My job is to help you. And if that policy looks fantastic, I'll be the first person to tell you that's where you're going. Absolutely looks fantastic. But if I look at it and it's missing roof replacement coverage, so there's something called ACV, actual cost value, meaning you would have to pay the depreciation on that roof if something were to happen. So you have this fancy 1% wind and hail deductible that's very intriguing because a lot of the market and DFW will never offer that again. But then I see, you would have to pay, you have a 1%, so $500,000 dwelling rebuild cost, $5,000 deductible, plus 20% out of pocket for a $25,000 roof. So you end up getting essentially screwed in the end. So you save $200 to spend triple if something were to happen. So that's my job to educate and say, hey, look, for a few $100s more, let's fully cover your roof.
Yeah, I mean, it makes sense. I mean, if you got to pay an extra 10 grand, I mean, that was $300 divided by, or $200 divided by 10 grand.
And like, insurance, you hope you never have to touch insurance, right? Ever.
Right.
But if you do, you don't want to get blindsided later. Because, and I'm not speaking bad on anything, but like, I think what's super common right now is you're getting a quote from any company and that's it. It's just emailed to you and it's your job to say if you want or not. And I think that 99% of people who don't know insurance are going to look at two things, the premium and the rebuild. And that's it. They don't realize that there's water coverage, that there's the full roof, that there's deductibles, that there's other structures, and there's so many other things that you need or want to at least know you're covered that isn't being explained. So I always say, if someone's like, hey, send me the quote, I'll let you know. I say, I'm going to give you a call, go over the quote, and then after that, you can review, you can do everything you need. But I want to make sure I do the handheld approach and go line by line. Yeah. And then you'll know, oh my gosh, I had no idea that there was 4 different types of water coverage that I needed. I thought there was 1.
Gee, I didn't
There's
know
4.
either.
Yeah.
There's
All right,
hidden
I have a
pipes.
question for both of you.
Yeah.
So, as you know, solar panels are becoming very, very popular in the DFW area. And I know that it affects insurance, and I also know that it affects the ability to get a loan on some of these homes. Do you find that homes, when people come forward and they're like, hey, I'm buying a home and it has solar panels, insurance premiums higher, lower? Do you insure it differently?
That's actually not a big issue. Some companies won't do it, and so that's actually pretty nice. If it doesn't have to go to underwriting is crazy because it's like, what's going to happen? But for a company to say, hey, we're not going to do it is great. Move on to the next. But all it does is become part of your rebuild cost. That's really it. So it becomes attached to your roof.
Okay.
So now your dwelling essentially just goes up by, let's just call it $30,000. So therefore your premium goes up a little bit, but that's all it is.
So it just affects your premium a little bit.
Just because your rebuild goes up a little bit because it becomes attached to your home.
And how does that affect the mortgages? So if it's not already paid off, can they roll that over?
Well, I mean, that's actually a good point because a lot of times they are tied to, as a second lien. So yes, they would have to be paid off. If it's a sales transaction, if it's a refinance transaction, if you were pulling equity out of your house, that could be an issue because now it's sitting as a second lien position. Whereas, if we're paying off the first lien, and a lot of times that is the miseducation that the borrower gets when they are taking out this loan, that they don't understand that kind of locks them in. So if that first mortgage is paid off and you're looking to pull equity out, that second now slides into that first. Texas does have, if it was just a rate and term refinance, we are able to refinance the first and put in a new first without touching the second. But if it is a cash out transaction, so you just shut down your equity or your ability to tap into your equity without paying that.
So you at SurePath know how to handle those things. So
yes, we definitely
if I absolutely
well versed in how to navigate it. Not always the easiest. I mean, we've had several times where, the seller of a home didn't realize, that they had a $30,000 balance. Yes. And, so the expectation, for their walk away cash was quite a bit different. So, what about buyer behavior? What are you guys kind of seeing as far as, what's the overall sentiment? And I know we just had an election, and without getting too political or anything like that, how do you guys feel like the buyer's sentiment is on the purchase and on as they purchase insurance and things like that? Like, what are your thoughts on that?
Well, I can tell you that I have a lot of buyers right now that are sitting on the fence. Unfortunately, with the interest rates where they are, they still have this belief that we're going to go down back to 3% and 4%, which I think we all understand that's just not going to happen. It's funny, I just posted something yesterday, I believe, on the internet, on Instagram, sorry, that it was after an election year. How many people sit on the fence during an election year? And then couple that with the interest rates, which should have gone down, but they didn't. They went just in the opposite, and they went up. and people are just waiting. What I had posted, we talked about how after the election year, historically speaking, the past 20 years, we've seen a 7% increase in prices the year following an election. So what does that mean to the buyers? If you're looking to purchase a home, you need to get out there now before it hits. I think we're going to see a December that is a little bit busier than what we normally see because all of that election junk is behind us. We can look forward now. And we can forge that path. And I believe we should see some interest rates reductions coming, correct?
Yes. So the Fed is supposed to meet again next month, and so they're anticipating a quarter basis point off of there. But then next year, 2025, there's nothing's guaranteed. I mean, they're definitely following their charts and graphs and all the data that they use to make that decision, but. Ideally, they're trying to get the Fed rate down to 2.75 to 3%, which is significantly, lower than where we are now. Right now, we're sitting at 4.75 to 4.5. So, as far as I think with the election, you've got, buyers are just more confident in what the next 4 years will look like. With the election, it always gives turmoil. All right, if it goes this way, if it goes that way, what am I going to look like? And I'm just going to sit tight, rally my troops, and sit here and wait until I can, come up with a decision and know, kind of what's going to support me, out there in the marketplace. So, I'm hoping that that's the sentiment that will kind of verbiate through the rest of the year in 2025. So
it's kind of like the stock market. I feel like if you get in too late, everyone's going to be doing it, and then the house. Exactly. I feel like these home costs are just going to skyrocket by the time it's cool to get a house with lower interest rates. So I think this is your market, but like buy now at a 6.5% interest rate, do what you got to do, and then when the market does come down, you bought a house for $50,000 less and you refinance.
Yeah.
Is there any things you can do to help with, because I know there's costs associated with refinancing. Is there anything in this particular type of market we're in where there's?
That's very good. Yeah. So there's actually a loan product that's out there. It's a 2-1 buy down or a 1-0 buy down. And the way that works, it is, it's a 30-year mortgage. And the interest rate is fixed for a specified, for 30 years. But let's say the interest rate is 6.9%. All right, so it's fixed for 30 years. But for either, if it was a 1-0 buy down, then the first year it's going to go down to 1%, or go down 1% to 5.99. So that gives them an opportunity. So if it was a 2-1 buy down, it would go down to 4.99 for the first year. Second year goes to 5.99. Third year goes back to market. So the way that works is the interest that would be due or would be paid by the borrower is either paid. There's two ways you can set it up. One is seller paid. So if you can negotiate, and that's the other thing. If you're in a market, you can really get negotiate a lot of closing costs and things like that. So it can be negotiated to have the seller pay it. We have it as a lender to where it can be rolled in as a lender premium. But really that mortgage is a 1 to 2 year loan with the anticipation that in the next 12 to 24 months you're going to be refinancing.
Yeah, so, absolutely.
And Daniel, I have a couple of stories about that because I've used that tool quite often in 2024, and primarily because of the reason of your insurance costs were so high. And so I had listings that were sitting on the money. Yeah, not your insurance costs, but insurance in general. So I had a couple of listings that were sitting there on the market, and we brought this. I had asked Daniel, do you have anything? Do you suggest that I can bring to my sellers? And he mentioned the 2-1 buy down, and it was a fantastic option for them because instead of lowering the cost of the home, so buyers will come in and they'll offer less. By offering that 2-1 buy down, it actually brought down the monthly payment, and then they could afford that additional insurance premium for that they were paying in 2024, with the anticipation that rates would come down, insurance costs would come down, and they had 2 years to do that. So it was a phenomenal tool that we were able to use, and I'm going to continue to use that moving forward, because even as the interest rates decrease to 6%, or hopefully lower, but I don't know about that. So lower to 6%, we're talking 4%.
So future predictions. So I know DFW is like a hotbed. So we are in one of the markets, and I read some data the other day that by 2030, something like that, we're going to be competing with LA and New York, and so it is going to be a hotbed. And with that said, so when you have that, these starter homes and things like that, I mean, you look at California, I know you're from California, so you look at California and you've got these teeny tiny little houses, and here they wouldn't be anything, but they're $500,000, $800,000. And, so when you get into those, heavy markets like that, I mean, it really starts driving the price, and there's no looking back once they start.
Yeah, well, on the insurance piece, I don't want anyone to play victim to insurance, right? Every state's got their stuff. California's got the fires, Florida's got the hurricanes, Louisiana, Texas, we got the hail and the freeze. Like, every state's got their thing. So, things just need to slow down. That's all I need. We made it through 2 winters. That's fantastic. We're on to newer and bigger things. We're bringing on so many new carriers. There's always gonna be good carriers out there, always. And I don't want people to think that it's something they did personally, right? I get calls, they go, oh my gosh, why did my insurance go up $1,500? I haven't had any claims, blah, blah, blah. I go, it's not you, it's the market. Same thing, market. It's just a bad market. And it's basically per county now. Collin County, it's rough to get insurance. I think the average home premium in Collin County is about $5,500. And because they got hit really, really bad in 2019 with hail and 2021 with the freeze. And so it's just a risky place to live. So I guess that kind of goes to you. It's like, maybe that comes up when someone's buying a house. Like, maybe right now Collin County isn't the best spot. Maybe we should look for Parker or something. I don't know, but that's just kind of what we're seeing. And the last bit I want to touch on is roof. I think I ask people, I go, hey, when was your roof last replaced? They go, oh, it's pretty new. It's only 10 years old. I go, that's fantastic. I go, anything older than 5 years is considered old in Texas. So you're better off getting a new roof than the how much the claim is going to hurt you, if that makes sense. So the reward is much better to get a brand new roof. Your premium, I've just messed around with it for people. If you have a 2016 home, 2016 roof, if I just mess around with it and put a 2024 roof, I think it saves around like $1,200, just like that on your premium. So there's a lot of stuff you can do. You just have to kind of take that extra step, I think, in this market.
Nice.
You had mentioned something before we were chatting about a clue report.
Yeah.
And you see all the time that you have different agencies that you work with. So explain to me what an insurance broker is versus a regular insurance company, and what a clue report is.
Right. So I mean, I would think any broker can run it, or any captive. So captive just means like they sell one product. So you're State Farm. They don't work with any brokers. My job is, like I said, to shop the entire market, any company we work with at least. And again, the handheld approach, walk through line by line to make sure you know exactly what you're covered for. But jumping on the clue report is super important for any realtor specifically. If you're buying a house, you want to know what's going on with that house. What kind of claims have run through this house? And I like to think everyone's a great person, but sometimes sellers don't disclose everything that's happened to the home. And recently I ran a home that had a $120,000 water claim, freeze claim, that wasn't disclosed. So I think the buyer has the right to know exactly what kind of house they're buying. And so I do that for realtors, where all my top realtors call me Sunday at 10 o'clock at night. They go, I need a clue report. All that means is I run any claims on that home all the way back to 2010 or whatever the year is. But I can see the whole history of that home, and I let you know kind of what you're getting yourself into. And it's always a great feeling when there's no claims. I say, green light, take it on.
Oh, that's pretty amazing.
Yeah.
I don't know about that.
Yeah.
Been doing this a long time.
Clue report's fantastic, yeah. And I tell every realtor to take advantage of me for that.
Yeah, absolutely.
I would definitely will.
Yeah.
I definitely will.
Thank you, guys. I want to appreciate you for tuning in today for our podcast. I want to thank Tommy with Goosehead Insurance and Michelle with Weichert Realty. Please like, follow, and subscribe.